Yo, what's up, guys? It's your boy Looney, and today I'm going to break down 3 charts that will help you become a better investor, especially if you're an option seller. And I'm not going to go over 20 indicators or 15 signals. I'm just going to go over 3 simple charts that help you find some good entries, avoid bad ones, and also, if you're an option seller, sell premium with way more confidence. Let's get right into it. But before we do, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month, and you get access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. Check it out. All the links are down in the description. Now, all these indicators you could use on any stock, and the first one being RSI. Now, I'm going to pull up SPY because you can do it on SPY. So on SPY, we are going to look at RSI, which is the relative strength index. And if you go to the advanced chart, you can see it pull up. And the way you pull it up is you hit this little F symbol, and it's one of these options up here. You could just leave the default settings, but I'm not a huge indicator person, but I do use it. I think RSI is one of the few tools that is helpful, especially if you're selling options. So with RSI, when RSI is high, and that's the bottom part, the relative strength index, it's saying that the position is overbought, and that's when you want to be selling covered calls if you're an option seller, and you're kind of giving yourself room for the stock to cool off. Now, if you're just an investor, maybe just avoid making massive purchases at these levels. Even if you do want to buy, maybe buy a little less than you were intending. That's the points. But I mean, if you're a long-term investor, it doesn't necessarily matter when you invest, but it is worth noting that these are times showing of overbought on whatever time frame you're showing. Now, when RSI is low, when it's like under 30, and this is range from 30 to 70, or I think 40 to 70, and when it's showing under those numbers, under the 40, that's showing that it's oversold, whatever position you're doing. And as an option seller, this is when you want to be selling cash secured puts, maybe even put credit spreads. But this is where you're entering when everyone else is sort of panicking or just overselling. But RSI doesn't predict the exact top or bottom, but it does give you a probability edge. So for example, we could look at Webull, and this is an example where even though I did everything right, it still went wrong. Now I'm just gonna pull up this advanced chart, and on here, I believed I sold a put somewhere around here, or maybe like a month ago. And the lower was 10.92, so I sold like a $10 put, and you can see it dropped even lower. RSI was low. You could see here the 39, and I mentioned the Bollinger Bands. We're about to get into that one, but the RSI is under 40, so I thought this is a good entry, and you can see that it even dropped lower. Now, pretty recently, it dropped all the way down to, I believe, somewhere in the 9s or low 9s, and RSI is significantly lower. And yeah, again, this is when you want to be selling cash secured puts or maybe doing bigger purchases. And that's what I'm doing. I'm selling cash secured puts at these levels at $8, $9, $10, acquiring these shares. And when the stock finally turns around, because I like the fundamentals and I like the stock, I'll have the ability to sell covered calls at the top side of these RSI and collect that premium. So this is an example on this stock. RSI is simple. It's very visually easy to read, and it's perfect for figuring out like the timing of your entries. Now, the second one is the Bollinger Bands, and I kind of just talked upon it, but Bollinger Bands is basically, it shows where the stock is trading around like 95% of the time. The stock trades in between these Bollinger Bands because it's based on a standard deviation. But the way you need to understand it is that if the stock is trading towards the upper Bollinger Band, this is pretty similar to RSI. You kind of want to be sitting back and letting it do its thing, or maybe investing a little less than usual. Or if you're an option seller, this is when you want to be setting up those covered calls and showing that the price is a little bit stretched and often ready to cool down. Vice versa, if the price is near the lower Bollinger Band, this is good for selling puts or buying more aggressively, and volatility is elevated and just the stock is showing that it is oversold once again. Now, Bollinger Bands, there's different ways to look at it. Like the Bollinger Band's expanding. This means that volatility is increasing. And for option sellers, that's actually a really good thing because then premiums go up. You can see here that the Bollinger Band is sort of expanded right now. So the premiums are a lot better, maybe even better entries and better income opportunities. Now, when the bands contract, that's showing that volatility is tightening and premiums are shrinking. So you might want to be a little more selective with your choosing of strike prices with premiums or selling options. But that part isn't super important if you're just buying and holding, but it is worth noting if you are a option seller. But it is a very visual cheat code, in my opinion, for showing if the stock is stretched. And option selling is all about probabilities. It's not about predicting. So this helps you avoid selling puts at the top and also selling calls at the bottom. And yeah, Webull's a great example of this. I currently own 200 shares. I'm still in the negative. I'll probably begin to sell covered calls when it finally retraces, or hopefully retraces. We don't really know what's going to happen next, but it is showing that the stock is sort of oversold and this momentum can continue. Maybe there's some chance for the momentum to shift, but as of now, it's looking like it's going downwards, and we'll see. We'll see where Webull ends up in the next few months. I'll continue to hold, maybe even sell cash secured puts again or covered calls, and yeah, complete the wheel, collect income. Now, another chart I like to look at is called the VIX. Now, I talk about the VIX a ton. I learned more about it from Options with Ryan. He's a great YouTuber, and he actually taught me to use the VIX, or through his videos, I realized how important the VIX is, and it tells you how scared the market is. When volatility is high, there's a lot of fear, and when volatility is up, the premiums are a little bit better, and that's good for option sellers. So the way I read it is high VIX means high fear, premiums are rich, great time to sell puts. Assignments are possible, but you're getting paid to take that risk, and just overall wild moves. Now, on the other hand, when there's low VIX, it's showing things are very calm. The premiums are shrinking. It's a safer but lower return market. And you could sell covered calls at these points. And this is better for sort of light trading or managing open positions. And when the VIX spikes, because there are times where the VIX shoots up, and this could be an explanation as why many things kind of dump. And tech names reversing, or crypto, all these different high volatile positions end up dumping aggressive. This actually helps with that. We could see back in April that the VIX was pretty high. It was up $45. And yes, it can go higher. The market can continue to go lower, but it is a time when there's a lot of fear. And to be a good investor, you need to take advantage when there's a lot of fear in the market. And I would definitely use the VIX. I use the VIX daily. I'm always looking at the VIX, and it kind of decides how aggressive I want to be with my cash and my cash position. This is where Options with Ryan kind of taught me that, in the sense that I look at my cash when allocating premiums or selling options and where I want to have cash. Right now, I have about 18% in cash. I do have most of it in options, so there's a chance that I get assigned and I'll have a lot less cash. But that's where I'm at right now. And yeah, you don't need 20 indicators to be successful in option selling and just overall investing. I personally have mastered just these three charts, and the RSI helps you time highs and lows. The Bollinger Bands help you visualize volatility. And the VIX, again, tells you when premiums are worth selling or there's a lot of fear. And when you combine all three, finding good trades becomes a lot easier and a lot faster. If you found this video helpful, drop a like, leave a comment on which chart you use the most, and I'll catch you in the next one. Peace.